Good afternoon, and after that very heated political debate and on discussions on Adani, Hindenburg, and the budget, we will come down to a bit of a fine print on the budget with three very eminent tax people, and we will go into some of the elements of this budget which are on the tax front. First things first, I would like to ask all of you on your broad takeaways on the tax front, what the budget you think has in line with the subject of discussion, what are the hits and what do you think are the misses? Mr. Jain, first with you, please.
I think I should not. There's nothing to say about the hits and misses. It's so clear. What is the hit? Obviously, the 7 lakh rupees tax exemption threshold, that's the biggest hit, I believe. The thumping of tax in the parliament was an indicator. That's the biggest hit which was there on that part, on that issue. And the second part, if I can say on the hits, was that of reducing the surcharge from 37 to 25%. And I was very glad to see the Honorable Finance Minister day before explaining that she has reduced this tax rate from 42.7% to the 39%. And then she said, don't you feel 42.7 looks to be a little too high, and that's why you need to bring it back to 39. But I raised an issue. If it was so high, it was high for the last 4 years. So why it was so high if you consider it was high on that? And if you look at the misses, I will say the one miss in a lighter vein is, in a budget, you expect concession, and the finance minister is obliging you by not putting any additional tax. That's the biggest miss. You don't find any new tax in this budget. That's a miss in the budget. That's a great thing. But looking on the realistic side, I will say India is going to become the global capital of manufacturing. Geopolitical situation permits India, China to shift the base to India. And this is a golden opportunity for India. We introduced in 2019 a corporate rate of 15% for company manufacturing in India after 1st September 2019. And that exemption is going to expire up to 31st March 24. If we are really looking make in India, if we are really wanting that India should be the global manufacturing capital, there is no reason why this should not be extended, should be available. People who want to put a project, maybe 1 year, 2 years, 3 years, if I want to put a project in 2023 and I see the gestation period of 2 years for putting the plant in operation, I can't do it because the exemption will go by 31st March 24. So I think this should have been extended, and this is the biggest miss, which I believe in the budget.
Thank you, Mr. Jain. Niru, your view.
Right. So I think Vedji has already talked about the personal tax, which we all consider as a hit. On the corporate tax side, I think taking his words, but giving a different point of view, the fact that the tax rates have remained stable for corporates, there is no change in the tax rates, I think that is also a hit, because we keep wondering what's going to happen next, is it going to go up or down, and I think the finance minister gave a very clear message that we want it to be a stable tax regime. So I think that's clearly a hit. Another interesting hit which I read about was around the litigation. One of the biggest pain points of industry is that anything we do in tax, any tax return, we file, it gets audited, there are disagreements with the tax officers, there are disputes, and these tax disputes go on for years altogether. So one very nice move she has announced is that there will be a new post created of a joint commissioner of income tax appeals, and they will take care of a lot of backlog of appeals. So I think that's another hit which we ought to talk about. In terms of the misses, again, manufacturing companies have to start manufacturing by 31st March 24. One of our asks, or rather ask of the industry, was that there's a condition in this to avail the lower tax rate, that you must set up a new legal entity. Now, one of the asks of the industry was, please do away with this condition, because when we want to bring in new investment, we don't necessarily want to spread into so many new entities. Allow us to bring the investment, set up the manufacturing in the existing, which I thought was a valid request, but this is a miss. We didn't hear anything about it. Similarly, there was an ask that extend this lower rate to service industry also. After all, they are adding value to the country as well. Why limit it only to manufacturing? So I think these are some of the misses which could have happened this year.
Sanjay, manufacturing, are you getting a lot of complaints from your clients about the date not being extended?
Yeah, I think this works.
Yep.
So I think we are getting that, because see the way you look at this manufacturing provision, one of the thing, and it's a hit and a miss. One, we did a great job of creating something like this, which is 15% tax, which you've never seen in any other parts of the even Asian countries. But I think the miss part is that we're doing a good amount of free trade agreements with the largest nations, and these are the new age free trade agreements. So if you look at the harmonization and putting it as a package, we have PLIs, we have state incentives, we have this corporate tax rate of 15%. We have custom duty exemptions which have been provided for bringing intermediates at a lower cost so that finished goods are manufactured in India. If you put it all together, they are independently being provided to the taxpayers or to a corporate. If you can package it, we could actually do something what Vietnam has done. Vietnam has created free trade agreements in a manner that the world's supply chain goes and sits there. Right. So this could have been a big one, probably in my view. But I just wanted to make a point, Saurav, that if I look at the hit, I think we need to look at some numbers. The prior panel said lots of stuff which actually makes me not say this, but I will still say this. So if you look at the numbers, we are 3.4 trillion economy. Our chief economic advisor says that we will reach 5 trillion by 2025 or 2026, 7 trillion by 2030 with the current numbers. Against this, if you look at the fiscal deficit, which is 6.3 going down to 5.9 and then going down to 4.5. If you look at that journey, no country has been able to achieve that journey. One of the biggest thing in a country is the tax GDP ratio, because the tax helps you to do the capex. We talk about the 10 lakh crores all the time. Where does the 10 lakh crore come from? So look at the tax and the borrowings mix. So I think if you look at the tax GDP ratio, this year it's 11.1%, and the next year it's going to be 11.1%. So we're going to maintain that ratio and then probably take it up. So I think if you look at the mathematics, if I was sitting there, I was wondering how well I would have got it to 4.5 with a country which is going at 7 trillion in 2030. I would actually say it's a commendable stuff. You will always, someone will get it and someone will not get it. I'll give an example. When COVID struck us, around the world, everyone changed their corporate tax rates. India did not change it. And they had to make a balancing act. What did India do? We didn't change our corporate tax rates, but we took away the depreciation on goodwill. That was enough to just balance out everything. That same thing has happened now. The 42 to 39 is balanced by those two things, by bringing down the deduction to 10 crores for new house and managing the insurance policy. So it's a balanced budget, but I think manufacturing we could have done better by actually packaging it with all the other stuff we are doing around.
No, that's a good point, and we'll come to the other points in a little while. Mr. Jain, tell us about, I mean, you mentioned the new and the old tax regimes at the beginning of your comments. What do you expect in terms of the public, whether they will go in large numbers, opt for the new regime, given the fact that, you know, there's a simplified tax structure there, but yet there are a whole lot of salaried people who want tax savings as well. So where do you see that playing out?
See, now one must appreciate the way the new structure has been now worked out and proposed in the budget. And I see for all resident individual, by and large, there will be no option but to opt for the new regime. And the reasons are obvious. The tax benefit extended in the new regime vis-a-vis the old regime is so high if you just look at the calculations, if I do the calculation as 7 lakh rupees, there is no option for an individual because there is no tax, whatever you do it. On 9 lakhs, if I do the calculation, still I say I am benefited under the new regime. Only when the challenge comes is when your income is falling between 7 to 10 lakh rupees and you have some saving or more than 3 lakh rupees, so that there can be a possibility that the tax in the old regime may be lower by 2,500 to 5,000 rupees. Other than that, absolutely no advantage in the old regime for resident individual, that's the issue. But you have raised a larger issue about the saving. See, what was the earlier policy was that you make saving, which was a basket given by the government, that this is the basket you can make the investment. If you make, then I will give you a concession. Now, you don't make an investment, the basket is wide open. In that basket or some other basket, you make an investment. That's, you are not stopped from making investment. Only thing is you are not going to get a rebate for making that investment. That's the only difference. And it does have a larger implication, frankly speaking. From if a society to create a social security, I think this is a larger question to be pondered over, whether we want taxpayer not to create a social security, because earlier the taxpayer was being, I think, compelled to go for a social security. And the reasons were obvious. We being in India, being a population of 1.4 billion, the government of the day cannot assure a social security for all people up above 60 or 70 years that we will do it. So it was giving an option that when you are paying taxes, I may not be able to take care of you when you retire, but you create a social security for yourself. That was life insurance you created, you create a provident fund, or you like this. But now I believe the thought process is, instead of creating a social security, let's give an open basket to anyone and do it whatever the way it want to do it. So only challenge is that whether this will work and should be encouraged or not, that's a larger question which we need to work it out, because still the option is available. And the finance minister's idea, which I could get it out, is that if you have an income of 10 lakh rupees, you make an investment of 4 lakh rupees to get a tax rebate. Now the money which is left in hand is lower. Now on 10 lakh rupees, you don't make investment, you have additional money of 3 lakh 50,000 in your hand. And if I understand, out of 5 crore taxpayer who fall in this bracket up to 10 lakh rupees, even 1 crore taxpayer do not make investment, then the money supply in India is 3.5 lakh crore. This is a substantial amount. That's the money, and to propel the economy, increasing the purchasing power, making more money available in the hand of the taxpayer.
Ninu, Mr. Jain has actually raised a very important point about the social security aspect of it. Because of these the changes in the new and old tax regime, how do you look at that?
So few thoughts on this.
Because at the stage our country is in, do you think this is a little bit too early, or do you think this will play out over time?
Right. So let's talk about social security, or I think we're all talking about 80C, which was the relevant section in the erstwhile regime. And if you would recall, one of the important elements was investment in Provident Fund.
That's
if
right.
I take an example. Now, Provident Fund in any case is legally required to be done. So whether you get a tax rebate or not, Provident Fund is going to happen. Employers are going to pay 12% Provident Fund. Employees' salary will suffer a 12% Provident Fund deduction.
Right.
So that compulsory saving elements like Provident Fund, ESI, etc. will continue. They will not go away just because there is no tax rebate. However, the other angle that yes, people's habits, it's a mindset,
Yes,
it's a
yes.
softer issue,
Absolutely.
I think. We all grew up on the principles that save as much as you can. If you save, you will get a tax discount. I think those thoughts are a little not so current with the current generation. The current generation wants more cash in hand. They want to spend today.
They were also wanting to spend on crypto, right?
That's right. So I think the younger generation will be happy. They'll probably get more cash in their hands. They want to spend it now, and times have changed. So I think in our minds we need to de-link savings from tax. No one is stopping you from doing the savings. You must do the savings, right? But this generation, the younger generation, is doing savings in different ways. So I think it's a matter of what has happened over the years. The changes have come. They are saving in terms of buying a house or paying the mortgages. So I think we need to de-link tax with savings, and that's a fundamental
You think
shift.
that's the move the government is actually
I
pushing?
think so. You see, because in the past, the government announced this scheme long time back, couple of
Yes.
years ago. But a lot of individuals are not opting for the new scheme simply because of all the deductions and rebates they were getting, especially standard deduction. Now, since the proposal has that standard deduction will be given even in the new regime.
But then it's counterproductive, right? You're giving, yes, yes,
Yeah.
Mr. Jain.
I can just clarify on this one issue. See, under the labor law, we mandate that every employer will deduct a particular amount as a PF. And the labor law mandate is to ensure that every person who gets employed creates a social security. So tomorrow, if he's out of job or if he can get old age, he has enough money. And that was the scheme in the income tax also for self-employed people or other people. If they do not have a PF like this, they go for PPF, etc. So social security is considered to be an objective for the society to create awareness that you make saving today because you will need it tomorrow. Similarly, when we give medical insurance and ADDA rebate, the idea was that you please have insurance, health structure, tomorrow you will need the money. What happened in COVID? People needed money. Those who were having insurance, they got insured and they got the money. Now, with no incentive being available under the income tax, I do agree, open basket, one can buy it out. But labor law mandate that you have it, same logic applies for every person that they need to create some social security for future. That was the objective. I believe that has some clarity on this issue.
Sanjay, do you think then ATC is all but dead now with the new the regime?
No, I don't think so. I totally agree with what they have said, and I don't want to repeat. I think if the social security is not kept in mind, it will create a challenge. So I'll just give you an example. So my son is working in an organization which has only 6 people. So the PF doesn't apply to it. So he put money into PPF. And when the budget came in, he said, Papa, मैंने डाल दिया PPF में, I can actually go to the new scheme and get the same tax. मैंने बोला फिर भी अच्छा है तूने डाल दिया. Forget, don't take the rebate. It will come as a benefit to you. So I think that we always thought about savings, right? The social security, if you look at even the developed markets, it doesn't work without a social security scheme.
Right.
So I totally agree with Neeru that you need to de-link it. I think the best part is, look at the corporate tax. What do we have today? We have 25% tax rate for people with incentives, and you have the 25%, sorry, you have the 30% tax rate with benefits, and you have 22% without benefits. You can opt for it, and I think at some point of time we will all move to the new regime.
But at this point, the finance minister has herself said that this is the default option. But so how long do you see the old regime continuing?
See, one is if you look at the provisions of the law, it is not mandatory, right? So when the finance minister said that it is a default scheme, it doesn't mean that everyone has to move.
Yeah.
But the way things are moving, probably the expectation is that more and more people over the next 2 years should move to the new regime.
So 2 years, you're giving
That's
Mr.
my take.
Jain. Neeru, you
I would
wanted
say
to
1 year. I'm not so
Mr.
optimistic.
Jain, last word from you as we run out of time on how long you think the existing old regime will continue?
I believe it is fading out, and I am reasonably sure when the taxpayer are going to file the return next year, the statistics will be just reverse what we have. Now today the statistics says that out of the 7.5 crore, only 4 to 5 lakh have opted for the new regime and balance of the old regime. I am reasonably sure with the way I have worked out the calculation, the next time the data will be absolutely reversed. By and large, 99% going for the new regime and only 4 to 5%, somewhat percentage will be under the old regime. And once that happens, the old regime is likely to be withdrawn, or it will be given in the cold storage the way it has been done, 2.5 lakh to up to 5%, 5 lakh to 10 lakh to 20%, so nobody will pick it up, and the new regime slowly and slowly threshold will be increased, some more tax concession will be given, so we'll phase out. So now this has been extended to only also to the HUF, to the AOP and all other entities also. So it will fade right out. That's a plan I believe I can see to it.
This should make the finance minister happy because that is probably the aim. Thank you very much, Neeru and the gentlemen. Thank you. It was wonderful.